Hello traders, you are now advanced in your training and it is time for me to show you 3 of the strategies that are probably the best and most used in the market. Let's start by introducing the Fibonacci retracement. First, I will tell you a little more about Fibonacci because he is a mathematician who discovered many things in mathematics. I will also show you in which situations we enter Fibonacci retracement trades, how it is formed, when to enter a trade, where to place the stop, where the profits are placed. As I told you in the earlier videos, from now on we place 2 take profits, take profit 1 and take profit 2, because this way we can protect our trade to a very large extent. Let's get started and show you how to trade a Fibonacci retracement. Traders, we start with one of the most important strategies, perhaps the strategy you will use the most in your trading, the Fibonacci retracement. First, I'll tell you about Fibonacci. Fibonacci was a mathematician who discovered the Fibonacci number series, as well as discovered the golden ratio and ratio between numbers. He is one of the most important mathematicians and the discoverer of many of the logics in the mathematics. If you want, you can read more about him on Wikipedia to trust him a little more. My advice is to trust the strategy because it's one of the best trading strategies. It's very often used, it's used by all the good traders, so I think it will really help you. I'll start by explaining to you what the strategy is, how it is formed, when we enter into deals, where take profits are placed and where the stop loss is placed. What is the strategy? Fibonacci was a mathematician who discovered the golden ratio between numbers, as well as many of the logics in mathematics. Its logics are used to create programs that are used by the big players in the market, so we will also learn to use the Fibonacci retracement. Fibonacci retracement is used to measure how far the correction of the impulse wave will go. After we have an impulse wave, the big players leave the market, or when they no longer influence the market as much, a correction always forms, and thanks to the Fibonacci retracement, we can precisely see how far this correction will go. So, to catch the beginning of the new impulse wave, regardless of which direction it is. Here is an example. We have a very strong downward movement, a lower bottom than the previous bottoms, and then a correction has started. Now, my Fibonacci is going to be a lot different than what you will be using or what you have at all in TradingView or MetaTrader 4, doesn't matter, but I will show you how to set it up in a moment. This is of course how we can catch that there is a retracement to 50% Fibonacci, and then it becomes an identical wave down and even slightly bigger wave. When there is a retracement between one of those levels, 50% or 61.8% Fibonacci, then we will wait for a candle formation and of course then we will enter deals. To sum up, when we have impulse and a corrective waves, after each impulse wave, we know that a correction is going to be formed. And thanks to this strategy, Fibonacci, we will be able to understand to a very large extent how far the correction itself will last. And of course, when we get into deals, we will know how far the price would fall or rise, where we will actually to collect the profits. When we enter into a deal, regardless of whether it is a downward or upward movement, I have given both examples here. We enter a deal after the corrective wave reaches 50% or 61.8% Fibonacci and a formation of candles is formed. Remember, it is extremely important not to rush to enter a deal just because the price has gone up to 50% or up to 61.8%. Do not rush to enter deals at all. Always wait for a formation of candles. I will tell you right away why it is important to wait for a formation of candles. In this example, we have an upward movement. And when a formation of candles was already formed, what did it dictate to us? Do you remember? Dictated to us that here already the sellers, in this case I'm talking again, the sellers are already influencing the market and most likely a downward movement will begin. Of course, here we have an example with bull market. We have a very strong impulse wave, we have a correction. Look what a big candle down. Do you have the courage to enter with buys here? Right here. There is no way to enter because we have nothing confirming to us to enter with buy. But already when this formation is formed, like Morningstar, there is no problem anymore. We are fine. There is a perfect formation of candles. And look, after that, the take profit is reached. Now, we will also talk about the take profit. You simply wait for a candle formation to confirm the initiation of new move. The candlestick formation signals to us that the correction is over and new impulse wave will begin to form. Remember, all these things, print them out, look at them before you enter deals because they are extremely important. The top candlestick formations are engulfing candle, morning star for long position, evening star for short position, and pin bar with tail up or tail down. These are the top candlestick patterns. When and where is the profit collected? The profit is always collected twice. In this strategy, in fact, in almost all other strategies, we will collect take profit twice. At the 50% Fibonacci retracement, with a formation of candles. Again, I repeat it to you because it is extremely important to remember it. Take profit 1 is at the level of 27.2. Now, I will go a little lower. Let's say we have a pushback from 50%. If the price has not reached 61.8, then we have a pushback at 50%. If it has reached it, it may have slightly broken 50%. Right at 50% has repelled. It may have reached 61.8, slightly breaking it up, but not touching 78.6. If it touches 78.6, we simply do not enter trades, because this correction is most likely not a correction, but a new impulse wave. In the opposite direction will form, and most likely continue the movement in the opposite direction. I will try to find such examples so that I can show you in this video. So, we have a retracement of 50%. We have an evening star formation. We are entering deal. First take profit we take at the level of 27.2%. This is one of the levels that is almost always reached by the price. If you close everything at 27.2, you might even make more money because when you close the first trade here, the second take profit being fulfilled sometimes happens a lot less often. And for example, you close the first trade, you return the price slightly and then already hits the second take profit. The second take profit is placed at the level of 61.8%. What does that mean? If we have a repulsion of 50 and take the size of the previous impulse wave, the second impulse wave is almost identical to the first impulse wave. We already know from model 2 that the impulse waves are almost the same in size. Usually 3 impulse waves are formed, after which there is a lateral movement and a reverse movement in the opposite direction. So impulse wave, movement, correction to 50, candle formation, we enter a deal, first take profit we collect at 27.2 level, and second take profit at 61.8. The stop is always placed 10 pips above or below the 78.6 level, depending on whether you have long or short position. If you have long, you will put 10 pips below the level because we need to protect ourselves, so the stop should be lower. If we have short, we will put it above the level because when we have sales, I want you to see here is the level 78.6. That's why we make it 10 pips above the level. Of course, this way we protect our deal even more. If we have buy, we will put it 10 pips below 78.6 because we will need to protect our trade if by chance the price goes back down a bit more and then makes a move up. So if the retracement is from 61.8% by Fibonacci with a formation of candles, I will repeat it to you all the time because many people don't listen, so I will repeat it to you all the time. Be very careful, you should always place trades after a formation of candles. So at repulsion from 61.8%, or the correction has now become deeper, it has reached a higher level, it is no longer half of the previous impulse wave. because 50% is half of the previous impulse wave. 61.8% is already leading to a deeper correction. But actually, 61.8% stands for the golden ratio between numbers. And in the Fibonacci number unit, each number is obtained when we add two previous numbers. For example, when we add 1 and 2, we get 3. To get the next number from the Fibonacci number series, we must add 2 and 3, and it's 5. And now why am I telling you this way? Because when we divide 5 by 3, we get 61.8. This is used in robots. In trading programs, actually correction logic is used by robots in trading, and the best traders are obtained when the price reaches 61.8. I say the best because there is the best chance of a price reversal right away, really right away. Also, in a 61.8 pattern, the stop is much smaller, yes, but the take profit is also smaller. Why is the take profit smaller? Because this correction is deeper, and if we take the size of the previous impulse wave and apply it from 61.8, it comes exactly to 27.2 by Fibonacci. So we have to look for the most accurate level possible, or the most that the price would go. We close the first take profit at level 0 to secure the trade and leave the second take profit at 27.2 Fibonacci, which is the last level. I want you to notice that when we have a repulsion of 50, take profit 2 is 61.8 and take profit 1 is 27.2. And when we have a repulsions of 61.8, then take profit 1 is level 0 or the front tops, and take profit 2 is 27.2 by Fibonacci. Do you remember? I will summarize. At a retracement of 50% on Fibonacci, with the formation of candles, take profit 1 is 27.2 and take profit 2 is 61.8 level. And a retracement of 61.8 Fibonacci, or a deeper correction has occurred, then we already looking for a smaller take profit. Take profit 1 is at level 0 or at the front tops if we have long position, or at the front bottoms if we have short position, and take profit 2 is at the level of 27.2. It is very important that when the price reaches the first take profit, you take part of your profit and move the stop to profit, at least 5 pips. Whenever it reaches the first take profit, you take half of the profit and move the stop on the entry, 5 pips on profit. The stop, as we have already commented several times, is placed 10 pips below or above the 78.6 level, depending on whether you have long or short position. Let's now take a closer look at these deals. We have a nice impulse wave. Then the price starts to form a correction. We don't know how far this correction will go, and that's why we apply Fibonacci to see if it hits the 50% or 61.8% retracement. Now, here's a corrective wave and a 50% Fibonacci retracement with the formation of candles, beginning of the new impulse wave. If we have a formation of candles, it is clear that the movement will not continue up. Of course, we can never claim that 100% it won't continue up. If it did, we would all be billionaires, because with every formation we would earn a lot of money. But there is no way to claim 100% that it will always rise. That's why we also have a stop loss. Yet, very often it is shaped this way. After we have placed a trade, set the stop, made the first take profit, the second take profit, the price has started to go down, and with one big candle it hits the first take profit. Then we need to move the stop at least 5 pips on profit, so that if the price goes back up again from here, we have collected half of the profit and we have protected ourselves in such a way that there is no way to be on loss from this deal. And precisely when we make the stop 5 pips on profit, then cannot be on loss from the deal. The buy position has a Fibonacci start and end. 100 is always the beginning, the tail, the bottom, the lowest point of the beginning of the wave. The end of Fibonacci, level 0, is placed at the top of the impulse wave, from the tail or bottom to the top of the impulse wave, again to the tail, and then we wait for a correction. We draw it from the bottom upwards on an uptrend because we need to see how much of Fibonacci retracement percent we will have. When we have up to 61.8 retracement, then you're already waiting for a formation of candles. You are not in a hurry to immediately enter a deal. When you have a formation of candles, then you have a deal entry. You immediately set the stop at 10 pips below 78.6 and the first take profit is at 0. As I told you on the previous highs, and the second take profit at 27.2. And here is of course how it reaches the first take profit to level 0. We have moved the stop 5-10 pips to profit. This is where the price starts to come back, and so it is good that we have moved it, but then of course it hits the second take profit. Just sometimes you have to wait. There is no way that there will always be some strong, sharp movements in 1-2 days for us to reach our take profit. You have to be patient. Okay guys, let's jump into trading view so I can show you how to adjust your Fibonacci retracement. Let me find a blank space. Okay. First, whenever you have an impulse, you apply Fibonacci from the beginning to the end of this impulse to see where the correction will go to. This is how my Fibonacci looks like, but let me show you how your Fibonacci looks like. I'm going to use the default settings, and you can see it's very ugly. I'm kidding. Now, I'm gonna show you how to adjust it. First, let's go to settings. Let me move this to the left so we can see clearly. First thing we're gonna erase is the trend line. This trend line connects our beginning and the end of the impulse. We're gonna erase it because sometimes when you draw on the trend line on your chart, it may confuse you with other trend lines or anything else that you have drawn. So we're gonna erase it. The next thing is we're gonna unclick the second, third, the fifth, the sixth, and in the second field we're gonna unclick only the fifth thing. So we're gonna use these settings here. The first remain the same, it's 0. The third and the fourth also remains the same. Then here, the first thing we're gonna make it to minus 0.272. Okay, this is our first take profit. The second things remain the same. The third also remains, and the fourth we're gonna make it minus 0.618. This is our second take profit. You see what happened? Okay, now we're gonna make everything black. Of course, you can play with the settings, you can adjust it the way it fits perfectly for you, but from our experience, this is the most unstressful settings. Okay. Next, we're gonna make the background transparent. Okay. Then the prices and the values levels remains this way because sometimes when you draw your Fibonacci and you want to enter a deal, you can't see the perfect values of the price right now. So in this case, it will show it to you, but we're gonna make it on the right and in the middle, so it is more clearly. Let me adjust it again. Okay, so we can see what the values that we want to are. Then these are the settings that we need. Of course, again, you can play with the settings. The last thing we can do is to make these lines dashed lines, because this way, when you draw trend lines or strong weekly or monthly levels, you won't be confused with the levels. Okay, that was it. Again, here we start our Fibonacci retracement from this right here, Fibonacci, and you adjust the settings and draw it from the beginning to the end of the impulse wave. Okay, let's jump to the examples. Fibonacci retracement is practically used whenever there is impulse and a correction. We apply Fibonacci from the beginning of the impulse to its end to see to where the correction is going to end. I can give you many examples because Fibonacci is one of the most commonly used strategies, but the important thing is to understand how to use it and how to enter deals on it. So, I will show you now. Let's see this example. We have an uptrend here, then the price reaches the daily level and make a downward movement which breaks the previous bottoms. Then a correction is started to form. We're gonna apply Fibonacci from the beginning of this impulse wave to the lowest part of it, including the tails. We are looking for the lowest part where the price started to make some correction. Fibonacci will tell us, based on where the correction will end, where to expect the new impulse wave to go to. So, in this case, the price reaches the 50% level and immediately closes with an engulfing candle, with a big engulfing candle. This is good example. This is our entry in short position. Remember, whenever we have an impulse, we apply Fibonacci to measure the impulse wave and to see where the correction will end. So that will tell us where to expect the next impulse wave to go to. But whenever the price reaches maybe the 50 or the 61.8 level, don't rush to enter a deal. Wait for a formation of candles, or like this example right here, an engulfing candle or a pin bar to tell you where your entry point is. You will see in the next examples why you have to wait for a formation of candles. Okay, we enter a short position after this engulfing candle closes. Our stop loss is 10 pips above the 78.6 level, 134 pips. You can see it perfectly matches with the daily level. This is not coincidence. Fibonacci is very precise strategy. Our take profit, because the price reaches the 50% level, our first profit would be on the 27.2 level. When our first take profit is hit, we're gonna protect the deal by moving the stop on profit and extend our take profit to the 61.8 level. This is our second take profit. And you can see the price reach our second take profit. Okay, let's look back here. And we can see here we have an impulse and a correction. We don't have to apply Fibonacci to see that the price will not reach the 50 or the 61.8 level. So we're gonna erase it. Here we can use the strategy of trading breakthroughs. Then we have a correction and a new impulse. We again apply Fibonacci from the beginning to the end of the impulse wave. And we can see here the correction is started to form and it reaches the 61. Let me extend it here to see clearly. Okay. The price reaches the 61.8 level, but we don't have a formation of candles or engulfing candle or a pin bar to tell us where our entry should be. Here we have a pin bar, but the tail is on the bottom. If the tail was on the upper side, it would tell us that the buyers don't have enough strength and the sellers will take prevail. So it would be a good entry point. But in this case, this is not our entry point, so we are waiting for a proper entry, for a proper signal, a formation of candles, or engulfing candle or a pin bar, as we already said. And here you can see some manipulation maybe happened, but the price reaches the 78.6 level. And that tells us that maybe this downward movement is over and we're gonna wait for a new impulse upwards. Okay, now we're gonna erase it, and you can see here a new impulse wave upwards has been formed. So we're gonna apply a Fibonacci again and see that the price reaches the 61.8 level and closes with the formation of a morning star. This is perfect formation. This is our entry point in long position. Here, this time the stop is 10 pips under the 78.6 level. We're gonna make it to 60 pips. Our take profit, because of that the price reaches the 61.8 level, our first take profit gonna be on the 0% level. As you can see, it perfectly matches with the end of the impulse wave. Here our first take profit is hit, then we're gonna protect the deal and move our second take profit to the 27.2 level. And here the price reaches our second take profit. So whenever we have an impulse and a correction is started to form, we apply Fibonacci to see where we expect the correction to end and maybe to predict to where the new impulse wave will go to. Okay, let's see here. We have a huge impulse. We apply our Fibonacci and wait to see where the correction will end. Now, let's see. Here we can see that the price tests this daily level again and closes with a huge engulfing candle. That is our entry in a short position. We enter a deal here. Our stop loss 10 pips above the 78.6 level or 93 pips. Our take profit, because of that the price repulsed from the 61.8 level, our first take profit would be on the 0% level. Let's see. Here our first take profit is hit. Then we're gonna protect the deal by moving the stop on profit and extend our second take profit 27.2 level. You can see the price almost reaches our second take profit and then started to go up. Don't worry, we already protect our deal, so we just wait. And you can see our second take profit is hit. Okay traders, let's see another example of Fibonacci retracement. I already used the replay function, so we can go through it step by step. First, we have an impulse and a correction. This correction is too short, so here we can apply a strategy of trading breakthroughs. Because when we apply Fibonacci, it didn't go near 50 or 61%, so we're gonna erase it. Then we have new impulse, so we're gonna apply Fibonacci again to see where the correction will end. Let's see. The price started to make a correction, and here the price reaches the 50% level. So by this time we started to prepare for a formation of candles or a candle that will show us the exact entry in a short position. Let's see. Okay. Here we have a formation of an evening star. This is a perfect entry. So we're gonna enter a short position. Our stop loss 10 pips above the 78.6 level or 76 pips. Our first take profit, we're gonna make it to the 27.2 level, as you already know. Let's see what happened next. Let me adjust the take profit. here the price reaches our first take profit. Then, as you already know, we're gonna protect the deal by moving the stop on profit and extend our second take profit to the 61.8 level. But you have to have in mind that the price reaches a very round level, and as you know, from the strong weekly or monthly levels, the price can make a huge repulsion. In this case, we have a formation of an evening star. You already protect the deal by moving the stop to profit, so you don't have to worry about nothing. But in these cases, it is better for you to close the deal. Because, as you can see, if you didn't close the deal, your stop loss would be hit. Another example on Fibonacci. Okay, here we have an impulse. I already used the replay function again. Now, we apply Fibonacci from the beginning to the end of the impulse wave to see where the correction will go to. Okay, let's see what happened next. Here the price started to move sideways, and as we can see, here it makes a higher top. So we're gonna adjust our Fibonacci to the next top. Let's see what happened next. We have a huge fall, and the price reaches the 50% level. It almost reaches the 61.8 level, but it actually didn't reach it, so we have a repulsion from the 50% level, and the price closes with an engulfing candle. A perfect entry for long position. We enter our long position here. Our stop, this time 10 pips below the 78.6 level, or 66 pips. Our first take profit, because we have a repulsion of 50%, our first take profit is going to be here on the 27.2 level. Of course, we have to have in mind that here we have a very strong monthly level. So let's see what happened next. The price tests the level again and started to move upwards. Here, our take profit is reached, so we immediately move the stop to profit to protect the deal and extend our second take profit to the 61.8 level. Let me extend it a little bit. Okay. And here, our second take profit is hit. Here we have a huge impulse wave. This is not a correction, and this too is not a correction, because as we already said, on 1 hour chart we must have at least 5-6 candles to have a correction. So this is not a correction. This is a whole impulse wave. So we apply Fibonacci from the beginning to the end of the impulse wave. And let's see what happened next. The price, you can see, reaches the 61.8 level. We are waiting. You can see the price almost reaches the 70.86 level, which will tell us that this upward movement is over and we are going to wait for a downward movement. But then we have an engulfing candle, so we don't have a repulsion from 78.6, but we have a repulsion from 61.8 with an engulfing candle. This is a perfect example again. We are entering a long position here. Our stop loss, 10 pips, under the 78.6, 35 pips. You can see it's a very shallow stop, which is good. Our first take profit on the 0% level. Let me draw it here. And let's see what happened next. Okay, here our first take profit is hit. As we said many times, we protect the deal, it's really important. Then we extend the second take profit up to the 27.2 level, or as we can see here we have a daily level, so we can adjust our second take profit 2, 3 or 5 pips lower than the daily level. And as we can see, our second take profit is hit. Again, whenever we have an impulse, we apply Fibonacci from the beginning to the end of the impulse wave to see where the correction will go to and to foresee where the next impulse wave maybe will go. Now you already know how to trade Fibonacci retracement. It is a perfect strategy. We can apply it whenever we have an impulse wave and we wait for a correction. Fibonacci retracement perfectly matches with other strategies. We're gonna talk about it in the next courses. Now I want you to go on the chart and find at least 15-20 examples so that you can practice and learn how to use the Fibonacci retracement because it gives a great success rate. Now let's move on.